Hi, everybody. Happy President's Day to those celebrating here in the U.S. So I have the moniker coach, so I'm going to put a couple hats on today. First, it's going to be my coaching hat. So everyone knows that when it comes to big red events like the NFP and central banks, I teach not to get positioned in front of it to predict the reaction. So if I profess that on economic numbers, how much more should I profess it? What could be a very large Sigma event with Russia? Will they or won't they? And just you're going to have all kinds of headlines. Now there may be a summit or another meeting between Putin and Biden. And I would prefer to just wait for a reaction and hoping that this isn't something that's strung out, really hoping for peace and a withdrawal of troops. But, you could be the best technician in the world, and on an event like this, this can be a one mistake business. And I don't want anyone hearing my voice to make that mistake. You could think that crude's topping and it could come in $10 to $20 higher when you wake up in the morning. And I guarantee you that even though this is a very globally stressful situation, and it's probably not going to get a lot better, we're probably going to have to get used to this, just like we had to get used to other things like COVID. And I think that people should consider being prudence over valor as an expression. Don't try and be a hero here. If you do have positions, reduce leverage. If, say, for example, you bought the gold on the breakout or in the test of the breakout, which I said if you have to or want to be long precious metals, gold was the one. And you could tell the difference between the gold and silver charts. They're almost night and day. Silver has way underperformed the gold. So what you need to do now is just imagine either scenario and what you would do after the scenario. So if there is an invasion, most likely there's going to be some safe haven buying in the dollar and the euro. You guys know I've been talking about the confluence down here at 110.50. So, if we do take it down here on the initiation of hostilities afterwards, I would be a buyer. I can recall many examples, especially Gulf War. So it wasn't Russia. I mean, Russia, I don't know what happened to the markets when we went into Crimea. I don't think it was huge, and there was this kind of move in gold. I know there was plenty of fear in the world at that time, but nothing happened. There really was no response by the world in Crimea. Maybe that's why we're in this situation now. So if we do get that flight to safety, and Europe is going to feel more vulnerable than the U.S., although Vladimir displayed his nuclear technology from the sea, from the land, and from the air this weekend. So really no one is safe in this type of situation should it escalate and there end up being accidents and miscalculations. But as a trader, should that occur, I'm a buyer down here. If we start closing back over 115, the scenario changes and the euro has bottomed, and then most likely the dollar is topped. So, I still think there's another run at the highs in the dollar up towards 98. So again, I'm not going to anticipate it, because if the Russians withdraw right now, you could have a big break in the dollar, because I think a lot of this, besides what the Fed's going to do in mid-March, is some safe haven buying. I think the gold is safe haven buying. Okay, and in fact, depending upon what happens this week, I actually see a setup happening for a short. I prefer the shorts in silver, because the gold silver ratio still looks like it, could make another push above 80. But this gold formation is something that I've taught a long time would be a third drive. So I'm going to be interested if there is an invasion, you would think there'd be a move into gold on the invasion. And what I've seen in the Gulf War is that we had a big rally in gold and big rally in oil, similar to the setups we have here. And on the initiation of hostilities, I remember back then I was on the golf course and I saw it on TV. We didn't have cell phones back then and had to rush back to the office. And what happened was gold peaked and oil peaked and the bonds bottomed and S&P's bottom. So, you could have this being, some type of final hurrah on it, and maybe the world's going to decide that it's not the end of the world and that the world could adjust to Ukraine being in the Russian orbit. And it's also possible that what if Putin only goes into the Russian speaker part of eastern Ukraine, where they've already been having a war for since Crimea, and 16,000 people have died, and he goes in there and he says, okay, I'm done, I've ended this conflict, and these are mainly the separatists are mainly Russian speakers, and they're being absorbed into Russia, and he stops. So there are so many possibilities that it's hard to have conviction to want to take risk in front of this. I think it's a very heavy sigma event, and I think you have to be Nostradamus to try and predict what the markets are going to do either way. I can guess, but I'm not willing to risk capital on a guess. I risk it on probabilities. And right now the deck is stacked that my charts won't mean anything for at least a little while. So for me, the best position for me to have is none, and not be afraid of missing something. One thing I'd like to point out, they're trying to hold stock indexes, but NASDAQ has actually almost completely retested the low. If you recall, I kept talking about that hedge fund meeting that they had in New York and how they interviewed a hedge fund operator who said they were very relieved when the market recovered that day. And I thought that relief might be temporary. And so far it's been about a month. S&Ps are still well above it by 100 handles. But there is one thing I know, if we sell off this market, and we make new lows under 4,200 and S&Ps, say down around 4,100, I think you could buy almost anything down there. So, I'm going to wait for it, because if he withdraws, we could put in a higher low here and rally back to 46, 4,700. So I don't want to be in a coin toss. I know I'm a seller up here. I know I'm a buyer down here. And I know it's prudent to do nothing right here. So that's exactly what I'm doing. Still remain negative on cable, struggling up here at the 36 level. If Russia wasn't part of the picture right now, I'd be recommending shorts in cable with stops over the high. But that kind of trading is something that I think is not rational in these in face of what we're looking at. I mean, the dichotomy of seeing the Olympics in China and Putin standing with Xi at the beginning of the Olympics and the closing ceremonies. Here's a little history. 50 years ago, Nixon went to China to develop relations with them to dissuade them from being getting close to Russia. So one of the major motivations for Nixon opening up to China was so that they were divided with Russia. And that has been the chessboard for quite a long time. But if you saw them standing together before the Olympics, the chessboard has changed. So something that's going to be part of our world for a long time, and just something else to factor in. Everything's changing here this year in 2022. Monetary policy has changed. So, we still have the Fed up there. Looking at oil, I was talking about a top last week, and we just grinded down here. Now, if the Russians withdraw, I think we'll go to 86 in a hurry, and maybe all the way down to 80. But when I look at this, it doesn't look impulsive. It looks just, choppy, corrective. You had a little divergence at the highs, but, a lot of people are saying if it's a full-on invasion, the number 120 is being bandied about a bit. I may look for a place at new highs to fade the oil market. I think a lot of this has been priced in with these moves that we've had all the way up here. That maybe this whole last move has been war premium with Russia. I mean, anything that Russia produces, every natural resource that they produce, it's been in a bull run. You look at platinum, palladium, wheat. So, they're rich in natural resources, and they're going to use energy for leverage, even if there isn't an invasion. But something to keep an eye on in crude oil. I'm flat and didn't want to take anything home over the weekend for a short in oil, but I may try that. Silver, as I said, has been weaker than gold. And as you can see, it's tried the 78% retrace level a couple of times here. I really think that for silver to turn good, this is really going to be an important breakout if it could get through this 50-week moving average. Comes in at 24.55, the prior high up here. We get over here and you have a breakout. We're going to new highs in silver. So it's a very important level. We could start trading back under your first sign of silver starting to do something wrong again would be to close back under 61.8, as well as this trend line that we have working here. So 24.55 is this high right here. We can't take that out or the bear case is over. There is no bear case. And in fact, the only bear case so far has been silver's underperformance of gold. And it's not only being expressed in the bullion, it's being expressed in the miners. I mean, take a look at the differentiation between the gold miners. Here's Yamana, here's Newmont, and here's SILJ, all the juniors. Night and day. Here's another silver, First Majestic. Here's a couple of juniors. So if you were long the silver shares with gold exploding, you're probably a bit disappointed. And, there's nothing here that tells me that there can't be another new low in the silver miners. We may not get new lows in GDX, although I know some guys that are thinking this 35 level is going to hold, and we're actually could get a big break back down even beneath this trend line that I have that's coming in at 27. I know some guys looking for 25 if gold fails up here. So, this is more about paying attention and being patient right now and not risking your hard-earned gains on one event. It's a one mistake business. And if you're over leveraged and the wrong way on this global event, it could mean that your trading account disappears. So I really profess trading small. If you want to trade, consider day trading when you're in front of the screen, and always have a stop in now, because you really have to. I believe you should always have a stop in, but some people want to use a mental stop. Don't use a mental stop now, because you could have some outsized move and then you could get paralyzed, and it's a bigger loss than you had planned on taking with your mental stop. And then you go, well, I'll watch it for a while, or let's see what happens tomorrow. If you hear yourself saying those things, you need to be out of that trade. You maybe need to go back to the drawing board as well. So, these are my thoughts on where I think markets can go. And this is a time where you prepare yourself to react to whatever way this crisis goes. And, once we have a resolution, unless this is just going to be ongoing extortion forever, which I don't think it's going to be. I think we're going to know one way or the other this week. It'd be long enough for us to, kind of be sitting on the sidelines. But those are my views. And I wish everyone a great holiday here in the U.S. And tomorrow we'll be back. All the volume will be back tomorrow. Michael will be back with the volume tomorrow, and him and I are going to be talking about what he thinks. The markets have been under pressure, and I'm curious to know if Mike was trading on his vacation. So we'll see. Looking forward to talking to my trading warrior brother. This week also we have Dave H. Contrarian, at Dave H. Contrarian, and Dave is a super bull, and he was looking for this correction that we had in the S&Ps. I think he said between 44 and 43, and we're going to be talking to him Thursday and see what Dave is thinking. He's thinking, we could still have the melt up. He thought we'd have a correction before that occurred. So definitely tune in for that on Thursday as well. And just, live to trade another day and be a spectator rather than a speculator. I still like USD CAD, talked about it and had buy orders in at 126.70-ish last week. I still think this is a bull flag and that we're going to make a move to new highs. And, on the correlation, that would mean lower crude or maybe just a stronger dollar. So stronger dollar, I think we're on our way, breaking out over 128. So just something I wanted to update you with. And something that surprised me, the strongest currency against the dollar today is the Aussie. And I'm still negative Aussie. I still think we're going to trade under 70 cents. And here's some of my targeting areas in Aussie. So once the dust clears, I'm still looking for shorts in Aussie. And then long-term longs in Aussie. This could be the end of a wave 2. And we could have something like this or even more on a wave 3 to the upside or a C to the upside. So there are some big trades setting up here in the next several weeks or so, possibly a major dollar peak, right? Where there's going to be opportunities to diversify out the dollar into other fiat. So make sure you have your war chest filled for when we get to these important turning points. I invite everyone to come to TradeGate Hub. Good morning, Rich. How are you, Lewis, everybody? And share your ideas and become part of our trading family. Post your ideas and become accountable. And I hope that my analysis and my coaching is adding value to what you're trying to accomplish here. So good hunting. Remember, don't just count your pips, count your blessings. Here's a quick look at the ruble. Ruble's acting like, wants to take out last week's highs. This is a weekly. Actually, ruble is weakening when there's more of a thought of invasion. So it looks like we're going to take out last week's high in the ruble. Maybe it's a foreshadowing of what's going to happen in other markets with what US ruble is doing, because it came off last week here when there was thought that diplomacy might work. And here we are challenging the highs. If someone had to say, what do I think is going to happen? I would say that it's been the worst day. It's been written, the worst day for Vladimir Putin was on the dissolution of the USSR, and all the Baltics and other countries under the sphere of influence of the USSR went off on their own. That was a bad day for Putin. He's always wanted to reestablish this, and he has taken some steps in Georgia and Crimea. I think some other country he's also taken over. He sees this as a time to test a new president. He sees what's happening with Western the old West democracies, and there's so much division within every country because of what's happened with politics and COVID, that this is a sign that, and plus, all the hacking and election scandals and everything he's worked on and has been pursuing. He's prepared for this day his whole, since he probably, since that day the USSR dissolved, to reinstate it. And so my guess is, unfortunately, he's going to invade. So have a good day. In spite of it, we can't control anything. We can't control that. But we can control one thing as traders, and that's risk. And it's enough to be concerned about what's going to happen to the world, let alone taking huge hits in the market until there's a clearer sign of what's going to happen. So that's my advice. Take it or leave it. And I'll see everyone tomorrow. Adios. Good hunting. Hunt for food, not in the markets today. So I'll see everyone tomorrow with